Good morning, everybody. I hope you all had a good weekend and are all looking forward to the week ahead. So, if we have a look at what happened in the markets last week, we saw a bit of a mixed bag, really. With the Dow was down 0.6%, the Nasdaq was down 1.5%, the FTSE was down on the week 0.5%, albeit we did touch on an all-time high earlier in the week, which I'll talk about a bit later. The bundle of four was down 0.8%. Once again proving the theory that the falls weren't as bad as the Nasdaq as a tracker. The Nikkei was up, albeit only 0.1%. We saw some positive news out of China, and their market was up 2.1%, and the DAX in Germany was also up 0.9%. So some gains in some of the markets that have performed less well this year, and a little bit of a pullback in some of the markets that have performed better. On the currency side, we continue to see the US dollar strengthen against both the euro and the British pound, or the British rupee, as it's going to be called fairly soon if it continues the way things are going. 112 down to 110 with the US dollar against the euro. 124 down to 122 US dollar against the pound. As we know, as we've seen in the news, it's the lowest pound value for the last 31 years. And although I certainly still believe buying it for a longer term at this price is good value, I'm not sure how long it will take for a recovery to happen. It could be 6 months, it could be 12 months. And of course, this is a shame for people in the UK going on holiday, because these 12, 15, possibly 20% swings in the value of their currency makes a big difference to the average family going on holiday. And again, this is one of the major reasons why I also always recommend you should have cash and you should have investments across a wide range of currencies, because the currency markets are volatile places, and it's a tough time for us with British pounds in the pocket right now. That said, the flip side, as I mentioned before, we did have the FTSE at the highest level ever, so therefore, of course, what we're losing on the value of our pound, we're hopefully gaining on our stocks and shares exposure over there. The US dollar, Aussie dollar was flat at 76 cents for the week. And we continue to see the US dollar strengthening against the Japanese yen, which is what the Japanese are going to want. So it went from 102 to 104. So one of the big stories that's floating around at the moment is Samsung. As a lot of you know, I'm a big fan of technology and technology funds. And there'll be quite a lot of managers that I use which would have had exposure to the shares in Samsung. Now, we all know what's going on with the Galaxy S7. There's a problem with the battery, and therefore they're basically all being recalled and you're not allowed to fly with them, etc., etc. Just out of interest, the stock price, of course, is affected by this. It was down 6% on the week, which is not ideal, of course. But when you look at the bigger picture, year to date, Samsung shares are still up 25.4%. And like I mentioned with a company like Apple, when they had that $14 billion fine earlier in the year, these things do make a difference to companies of that size, but not a lasting difference. And ultimately, Samsung seems to be a company large enough and strong enough to be able to deal with this situation, and will continue to be a player in the iPhone market, or rather the smartphone market, and indeed all the other industries that it's involved in worldwide. So what else is going on? Elections are coming up. It looks more likely now that Hillary Clinton's going to win the election. I've seen some bookmakers offer odds of 5-1. I know on a Trump victory now. I know that earlier in the year we saw odds like that on a Brexit just prior to it, and they're not always right. But generally speaking, I think what's happened recently in the press has probably pretty much put an end to Donald's campaign, or Donald's chance of winning. And whilst I'm not here to pass judgment on any politics, I certainly think that a Hillary win will have less of an impact on the market, less of a volatile impact. And therefore, I think that possibly by avoiding a Trump victory, we're going to avoid more volatility and more unknowns going on. On the football side of things, we're back to Premiership football after a week of dull internationals, which everyone's been criticising. And again, it's business as usual in the Premiership. I noticed, even though we were only 9 games in, that the top 6 largest clubs in the Premiership are occupying places 1 to 5 at the moment. And if Manchester United win tonight against Liverpool, the top 6 will occupy places 1 to 6. So it's business as normal after the last year of the Leicester marvel, shall we say. So I won't keep too much of your time. Just want to finish with a quote, and this is by Peter Lynch, who you will have heard me quote before, who's one of the most successful investment managers of all time. And it relates a lot to what I talk about, because I am accused sometimes of being oversimplistic in the way I invest and the companies I invest in, and liking a company like Apple because it produces a phone that I like, and liking a company like Heinz because I enjoy their sauce, whatever it may be. I will stick with that when it comes to my stocks. I think there's a place for things like derivatives, a place for investments like hedge funds in every portfolio. But when it comes to actually companies, transparent, simple companies who provide a good product, I think are where your money should be. And Lynch's comment was, if you're prepared to invest in a company, you ought to be able to explain why in simple language that a 5th grader could understand, and quickly enough so they won't get bored. So there we go. Anyway, enjoy your week. Anything you know in Thailand this week, please give me a shout. Thank you. Bye-bye.